Welcome to In the Money. I'm your host, Daniel Dent. Over the last 20 years, I've worked with families and businesses, helping them become more financially savvy. And now I'm going to do the same for you. Each show, I'm going to discuss personal financial topics and bring in more experts to help you make better informed financial decisions. It's spring, which means it's the time of year when people buy their first home, upsize, downsize, or just stay where they are and renovate. While mortgage rates continue to hover near all-time lows, there's no better time to take advantage of a home loan. But as you start looking at mortgage options, it can be real confusing. FHA, VA, THDA, home equity lines of credit, fixed rates, balloons, interest only, jumbo, points. What does it all mean, and is it right for you? Joining us today to help us sort it all out is Sonya Pollard, Senior Home Loan Officer with Mortgage Investors Group. Home loans are one of the largest financial transactions in your life, so it's important to get it right, or it could cost you tens of thousands of dollars. Stay tuned.
You are watching Germantown Municipal Television, your source for everything Germantown.
We're discussing home loans today. Joining us is Sonya Pollard, Senior Home Loan Officer with MIG Mortgage Investors Group. Sonya, thanks for coming on the show today.
Thanks, Daniel. Glad to be here.
Welcome to the show. Tell us about yourself and a little bit about MIG.
I've been helping folks with home loans for the last 18 years, with MIG for a little over 3 years. MIG's been in Memphis for 6 years. We've been in Tennessee for over 25 years, and now we're the largest residential lending institution in Tennessee. So we do a lot of home loans for folks.
Great. Rates are relatively low, or really low. Tell us, where are they currently? What range are they in?
It depends on what kind of loan somebody needs, but a 15-year loan, I've seen rates as low as 2 3/4. Up to 3 1/2 on 15-year loans, and on 30-year loans, anywhere from 3 1/4 to the mid-4s, depending on what kind of loan they need.
So still a great time to buy and refinance or take cash out, home improvements and things like that. So let's do this. Let's pull out our crystal balls and let's see who's going to call this right. How long do you think rates are going to stay this low, or do you think they're going to move soon?
Unfortunately, my crystal ball is broken. But we see that the rates are probably going to stay good and low through the summer and maybe a little bit longer than that. The Fed looks like they're not going to raise rates until at least after June. And really, that's not the only thing that affects the market right now. The 10-year Treasury is really what affects the rates more than the Fed. And with all the global things that are going on right now, the Treasury yields are still low, so it looks like rates are going to stay low for a little bit longer.
Mm-hmm. I would tend to agree with you. I think if you go back to the beginning of this year, or end of last year, most economists would say that the Fed funds rate was going to move twice this year, once in June and maybe once in November, and now fast forward to where we are today, and most economists are turning around and saying probably once and probably at the end of the year. So I think you're right on. At least we think so today. That may change in another month or two. Tell us, as far as going around and shopping for rates, that's something I think is generally a good idea, but what are your thoughts on that?
I think shopping for rates are a good idea, but I think you also need to take into consideration who you're dealing with when you shop for rates. Make sure that you have a good rapport and have good communication with whoever you're dealing with, because an 1/8% may only cost you $7 a month, but if you don't close on time, if you miss your rate lock, if you don't understand the terms, you're looking at a lot more risk. So you need to look at more than just the rate.
Mm-hmm. Before the show, we were talking too, and you made a great point that it's always good to shop around, but once you have your credit score pulled once, you can take that credit score and tell the other competitor what your score is, and they can give you a general idea, and that'll keep your credit score from getting hit over and over and over and decreasing your score over time. With all of the things that you can buy online nowadays, of course, you can go out and get mortgage loans and car loans and things like that. What separates or what differentiates what you guys do versus just going out online and trying to get a loan that way?
Well, we are local, and all of our branches across the state have local mortgage loan officers that help customers. I think the biggest thing to having a local person is we know the area, we know the attorneys, we know the real estate agents, we know what neighborhoods are like. So we know a lot more about the transaction and can really guide you through it a lot more than someone can that's 5 states away. Not to mention, if you have a problem, you can find us. You can find your local person and go to their office and get what you need. So I just think there's a lot of benefits to being with local.
Yeah, I agree with you. I think having somebody local and knowing the lay of the land and someone that's worked in the area is very helpful, and I think can be very powerful as a consumer. Tell me this, what are your top 3 tips for home buyers?
My top tips, I think the first one would be get pre-approved. Before you go out, you want to make sure that you're looking in the right price range, in the right area, so that you can afford the house that you want. Instead, it's very disappointing when you go look at $400,000 houses and then find out that you can only buy a $250,000 house, because those $250,000 houses just don't have all of the same upgrades and things like that. So you're going to be really disappointed. The other thing is use a realtor. Have your own realtor. Don't just call the realtor on the sign. They're there to represent the seller. They'll help you, but if you have your own realtor working for you, it's a huge benefit because they're saving you money and not costing you anything. So make sure you find a good realtor. And then once you find the house, have that house inspected. Because there's things that the seller may not even know about the house, and you want to know what you're getting into, because it could be a money pit if you don't discover those things up front. So,
yeah, I would add, coming from a financial planning and banking background for me, I would say make sure you get your financial house in order. So check your credit, make sure that there's no outstanding charge-offs or things at creditors. A lot of times you'll have old doctor's bills and things of that nature that are out there that you don't know about until you actually go try to buy a house or get pre-qualified, like you mentioned. With all of the laws changing over the last 7-8 years from the housing crisis, I think people that have purchased or refinanced or did a home loan 7-8 years ago or longer, if they go back and do it now, it's a lot different than back then. What's your take on that?
My take on that is, back then I was doing home loans, and we trusted that if someone had a great credit score and they told us their income, that it was as what they said. And we discovered that that wasn't always the case, and a lot of those people had issues. So one of the things that is a lot different now is that you have to document everything. We have to have document income, we have to document assets. There's a lot more disclosures and a lot more things that have to be done. So it's a little bit more complicated than it was 7-8 years ago.
Yeah, I agree. Great points. We're going to take a short break, and we'll be right back with Sonya Pollard. Please stay with us.
I'm Germantown Mayor Mike Palazzolo.
And I'm Germantown City Administrator Patrick Lawton. The results of our 2015 community survey are in, and we are happy to share them with you.
99% of survey respondents rated Germantown as an excellent or good place to live.
Satisfaction with city services, including police, fire, emergency medical, public works, and parks, were also included in the survey.
We invite you to check out a complete copy of the survey on our website at germantown-tn.gov/2015 survey.
So, same time next week?
Well, of course. Put away a few bucks, feel like $1 million. For free tips to help you save, go to Feed the Pig.
You are watching Germantown Municipal Television, your source for everything Germantown.
Welcome back to In the Money. I'm your host, Daniel Dent. If you're just joining us, we're talking about home loans with Sonya Pollard. Sonya, before the break, we were talking about some of the regulatory issues causing a lot of change over the past few years, and from a cost standpoint and a time and everything that goes into the pre-qualifying and application process. I know there's a lot of changes coming up August 1st of this year. Can you walk us through some of those?
Some of the changes that are coming up August 1st actually will affect not just the lenders and the borrowers. They'll also affect, the biggest effect is the title companies and closing attorneys. Everyone is having to be certified so that lenders will be able to use them. Still don't know, whose certification is going to be useful. So I know the attorneys are having a lot to do with that. And the cost of that certification can be really expensive depending on the size of the firm. Some of the other things that will be major effects are we have to be able to give a final closing disclosure at least 3 days prior to closing. In a deal where someone's selling a home to someone and buying a home at the same time, that can be huge, because if someone 3 or 4 transactions down the line has a last minute change, then it can bump everybody's closing by 3 days. So we're really concerned about the effects of those things, and we just have to make sure that everyone understands there can't be any last minute changes. I think all of these, the end effect is going to be, it's going to take more time to process a loan and to do real estate closings, and it's going to cost more money because of all of the additional software that we're going to have, all of the certifications, all of those different things are going to cost more money too. So,
That's a huge change going on in the industry, and I think consumers, the buyers, and the sellers, if you're selling your house, I think they're really going to feel the effects of that in cost and also time, because you already have a 3-day right to rescind, and now you're going to have a 3-day settlement period too, I believe, right?
right.
Yeah. Coming up on warmer weather, a lot of people are first-time home buyers. This is generally the peak season when people start buying homes. What are your big tips for first-time home buyers? What do they need to be worried about or consider?
First-time home buyers typically have more credit issues, or maybe they've been on their jobs a short amount of time. So for them, it's even more critical to get pre-approved, talk to a reputable lender that you feel comfortable with, and make sure that you've got all your stuff in a row and all together before you go out looking at houses. They definitely need to, start saving some money, because it is different to be a home buyer than a renter. So start saving up money, pay down debt, make sure that everything's paid on time. All of those good things.
Yeah, it goes back to what we were talking about before the break about getting your financial house in order. I think that's extremely important, other than walking into making an application or going online and making an application and then finding out at the last minute, oh my gosh, I've got to deal with this doctor's bill or this other outstanding issue, and that just delays the process and makes it more difficult. I mentioned at the top of the program, there's a lot of different terms that come with mortgages. You have FHA, VA, jumbos, and all of these other terms. It's almost like you have to have a PhD. So what are the things that we really need to know or need to be aware of from a terminology standpoint?
I guess the first thing you need to know is a conventional loan is kind of what things that are not government loans are called. The standards, the underwriting standards, are all going to conform to the same standards as far as how we calculate income, assets, all of those good things. Government loans, that would be FHA, VA, and also USDA, lots of initials there. But those are programs that are, especially FHA and USDA, are great to help first-time home buyers, and not necessarily just first-time home buyers, but folks who may have limited credit or limited assets for down payment. Those are great options. And then VA is a fabulous benefit for our veterans that allows them financing up to 100% of the home's purchase price. It depends on what county they're in and all that good stuff, but in Shelby County, up to $417,000. So it's a wonderful benefit for our veterans.
So the difference between an FHA, USDA, and VA loan down payment, is that a significant difference, or is it all kind of in the same ballpark?
FHA requires 3.5%, but will allow for down payment assistance programs, grants, gifts, those kind of things. USDA will actually allow you with no down payment, which is a great option, but you have to be in a census tract that's determined to be rural. So that's definitely going to depend on exactly where the house is. VA requires no down payment as long as you're under the limit in that county. So all of them are good options without a lot of money to put down.
So how do you know on the USDA, you said you don't have to put money down if it's in a rural area. How do you know if the home qualifies for that?
Well, first of all, the borrower has to qualify based on income and assets for the product. So we have to make sure that, you know, based on all of their income documentation, that they qualify for it. And then we can put in on the Fannie Mae website, we can put in the address, and it will pull up a geocode for us so we can find out if it's in the right census tract.
Okay, that's great. So it's as simple as just putting in the address, and someone will be able to know they would qualify for that. Want to talk more about this? We have to take another short break. We'll continue our conversation around home loans with Sonya after a short message. Please stay with us.
So who's going to do what?
I'll pack the dead batteries.
Great.
I'll only put what I don't need into a duffel bag.
Perfect. That's totally unhelpful.
No problem.
Meanwhile, I will try to comfort everyone by speaking in a calm voice. And who is going to handle supplies?
I can forget to do a list for us.
Thanks, pal.
We couldn't be any less prepared. I'm proud of you guys.
Talk to your kids about who to call, where to meet, what to pack. Visit ready.gov/kids for tips and information.
So they say it's a man's world? I don't see anybody's name on it. While they were doing their thing, we slowly changed all that. Today, women can do anything men can do. And there's one thing we're even better at.
You are watching Germantown Municipal Television, your source for everything Germantown.
Welcome back to In the Money. We're back with Sonya Pollard of Mortgage Investors Group discussing home loans. Sonya, before the break, we talked about first-time home buyers, and I want to talk about people that have already owned a home, or maybe they're selling their home and buying a new home. So from a mortgage standpoint, what are some of the differences between a second, third-time home buyer from a first-time home buyer?
It's a little bit more complicated for that second or third time home buyer because most of the time they have to sell the house they're in to purchase the next house because that's where their down payment is coming from, or perhaps they can't qualify with both payments. So we have to make sure that that house is sold in order to purchase the next one and that they're not homeless in the meantime. So that's usually the biggest complication there. But typically they're a little bit more sophisticated. They do have some assets for down payment, either from the proceeds of the other home or from savings.
Another thing I wanted to touch on, it's more of a controversial topic, or it has been in the past, reverse mortgages. And we could honestly probably do an entire show on reverse mortgages, but what are your thoughts on reverse mortgages?
I think they're a great product for the right person. They're not for everybody, but for the right person that wants to stay in their home, that is short on cash flow, it can be a great tool for them. I know the biggest issue most people have is their heirs. They want their heirs to receive their home when they pass away. But that may not be possible, and that's the only way for them to maintain their standard of living while they're still alive and living in their house. So, it's definitely something that needs to be considered, and consult with your advisors before you would do something like that. But for the right person, it's a great product.
I tend to agree. I think they've gotten a bad rap over the years. It's certainly not something for everyone, but like you said, for the right person, it is a good product, and it does make sense. And I think it has to fit with your entire financial picture, not just one segment of looking at it as solely a home loan. When I talk to people about purchasing homes and refinancing and things like that, I always ask the question, how much can you afford each month versus how much can you get qualified for? Because we've seen what happens in the housing crisis when people can get qualified for more than they can actually afford. How do you deal with that with your customers?
Absolutely. Every time I take a loan application, I ask them, how much are you paying right now in rent or your mortgage, and how much do you feel comfortable with? Because there may be a little flex between what they're comfortable with and what they can afford. But I always want to make sure I give them a range so that they can see what their options really are, and that they stay realistic, because there's a lot of expenses that I may not know about that aren't disclosed on a loan application and things like that. So it's important to know what somebody's comfortable with and keep them as close as you can to that comfort range.
One of the things that always comes up when people decide to buy a home is how much down payment and where does it need to come from, and also of course the cost, closing cost. Where do you see most of those closing costs and down payments? Where are they coming from?
We'll start with down payments. Down payments I see from a bunch of different places. We offer THDA, which is a Tennessee Housing Development Agency, loans that help first-time home buyers with their down payment. We also offer Shelby County down payment assistance, and those are some great tools for folks who have not been able to save up the money for a down payment. Also, we'll see people who've, from savings, from gifts from relatives, that's another acceptable source. If they have money saved up in a 401k, that's a way that they can get it also, if they can get a 401k loan. So there's a bunch of different ways to get down payment. Closing cost, usually they can either pay it themselves, or depending on the loan type and program, they can ask the seller to assist with the closing cost. And we see that a lot.
One thing, and I'll caution our viewers, I'm not a big fan of taking it out of your 401k. I know that's usually people's largest pool of money and largest source of money. When you take a loan out of a 401k, I think there's uses for it, almost like reverse mortgage. There's certain instances where it's good, but you're also paying interest. The interest goes back in your 401k, but if you were to leave employment, a lot of times you have to pay those dollars back, or else it's going to be treated as taxable income, as a withdrawal. So if you're under 59.5, you would have a 10% pre-tax penalty from the IRS, plus it's treated as regular income. And then taking a withdrawal also, I'm not a big fan of that either,
right,
for the same reasons. Let me ask you this, from a gift standpoint, again, touching on that, I know some companies require 2 months of the dollars being in your own personal account. How do you handle that, or what do you normally see out there in the market?
What I've seen is that we just require that we have a paper trail. We want to see that the money is coming from an acceptable source, and not perhaps coming from the realtor or the seller or anything that's not an acceptable source. So we just have to document the transfer, document where it came from, where it went, and we're okay with that. It doesn't have to be in there 30 days, 60 days, as long as we've got enough time to get it to underwriting and get it ready.
Yeah, we're seeing a lot of gifts coming in, especially for first-time home buyers, the millennial group with their parents helping them out with down payments and so forth. I will put you on the spot. We've all heard the horror stories of maybe unscrupulous lenders in the past. What are your tips for going out and finding a really good lender, somebody that's reputable?
I think my first tip would be, ask your friends, ask people you trust, what their experience has been like and who they recommend. I would ask a realtor if they have a mortgage banker that they work with that does a good job. And likewise, if you found a mortgage banker, ask them what realtor they think works best, for where you want to be. Seems like everybody has a different part of town they want to be in, different things they're looking for, and there may be a better realtor for you for exactly what you're looking for. So definitely ask for recommendations.
Great advice, great tips. Sonya, thanks for coming on today. I know you've helped just countless people in Germantown and the surrounding area over the years, and we appreciate your experience and your integrity in this industry. Thanks again for coming on.
Thanks, Daniel. It was fun to be here.
Whether you're purchasing your first or fifth home, choosing the right type of loan can be daunting. Follow these 3 easy steps. Step 1, determine how much you can afford. In addition to your payment, be sure to include utilities, taxes, condo or association fees, budget money for general upkeep, and even extra gas money if you have to drive a longer distance to work. Step 2, find a reputable mortgage officer or lender to work with who's willing to educate you and listen to your questions. A great lender will act as your partner or consultant during the process. And finally, step 3, pre-qualify. Very simple. If you're refinancing or needing money to renovate, follow the same simple 3-step process. If you follow these steps, you'll save a considerable amount of time and money and set yourself up for success. That's all the time we have today. Thanks to our guest, and thank you for watching. If you'd like to see more shows, follow us on YouTube or Facebook at Germantown Municipal Television. You can also visit our website at www.gmtvonline.org. And remember, each person's financial situation is unique. Before making any decisions, speak to a financial professional to see if our discussions today are in your best interest. We'll see you next month. I'm Daniel Dent, and now you are in the money.